Hey everyone, and thanks for jumping back into the Cryptoverse. This is a premium only video, so I hope you guys enjoy the content. In a lot of videos recently for the weekly report, weekly video, we spent a lot of time doing recaps, getting new people up to speed. In this one, we're going to do a complete 180 and basically get very technical. And I actually do think this video will be valuable to a lot of people. To some people, they might not care for it so much, but in order to please everyone, we have to have a range of videos that suit what anyone might want. So a lot of different people have different expectations. This one, we're going to be going into the Pine editor in TradingView. Okay, so if you've ever heard of PineScript, it's the language that TradingView uses. If you're ever curious how to use it, it could be somewhat intimidating. Why not use it? Let's use it. We'll walk through it together. The first thing you need to do is you need to go to TradingView. You can pull up a chart. You can pull up the Bitcoin chart. What we're going to do is we're going to recreate our Bitcoin bull market support band. Okay, so this thing you see right here, we're going to recreate that. Go to Pine Editor. Scroll it up. Name your study. We can call it whatever we want, right? We could say bull market support band practice. Okay? That's all we're going to do. That's all we're going to do. And then you can save it, right? You could save this and we'll just call it that. Now you have it right here. Now, what can we do? How would we plot the bull market support band? Okay, well, one thing to remember is, if you want to plot moving averages, yes, we can code it. You could also just come up here and add a moving average, right? And if you click on the settings of this moving average, you can see the length is 9. So this would be the 9-week moving average. If you shift this over to the daily time frame, now it's the 9-day moving average. Okay, but to get it to say stay constant, like if you wanted it to stay constant no matter what the time frame was, you would just go to settings and you would say indicator time frame, same as chart. That means whenever you shift it, it becomes the moving average for that time frame. If you want it to remain constant, you can just say, okay, I want it always to be the weekly moving average. And then no matter if I switch to weekly or daily, it still is that same 9-week moving average. Hopefully that makes sense. Okay, what we're going to do is we're going to go back over here. We'll change this back to the same as chart. Well, we actually don't even need it. So let's create a moving average in PineScript. So the first thing we can do is we'll call it SMA length, okay? And we'll have to put it as, we want to do this as an input. You don't have to, but by doing it like this, it allows the person later on to edit it. What does that mean? Well, the bull market support band, if we go to settings and we wanted to change it, okay, right now it's the 20-week SMA and the 21-week EMA. But what if we wanted to change it? So let's say you guys think, oh, what the hell's been talking about? Why is he using the 20-week SMA? Clearly, it's the 19 SMA. It's the 19-weekly SMA that's more important. You could change it, and it automatically will shift it for you. Now, it might not have been so obvious in that one, but if I were to change it to say the 4-week moving average, it will become a lot more obvious. Okay, so a pretty easy way to change it. And so we're going to allow people to use that as an input. So we're going to say input 20. We're going to say, okay, the default is going to be 20 weeks. The minimum value that people can put in, so the minimum value allowable will be, let's say 1. We don't need quotation marks. And then we'll call it, we can title it something. We'll say title equals SMA length. That's all we'll do. And then we also want to create our exponential moving average. So we'll just copy that and paste it, Control-C, Control-V. I'm sure most people know what that is. EMA length 21. And then we'll call this the EMA length. Now, obviously, we have not specified quite yet that this is a simple moving average and an exponential moving average, other than just calling that in our variable name. Okay, so it doesn't yet know what those are. We're just providing it as an input that people can use, and then we're going to reference this value. So from here, what we can do is we can get our source, like our closing price. So we want to get our closing price every day, every week. So we'll do that. And we'll just get it as an input. We'll say close. Close is just recognized as the closing price, like for the week, for the day. And we can call this source. Okay, let's just call it source. Now from here, what if we want to allow the filling variable to be something you can toggle on and off? So if we go to settings, you can see fill plot line. We can actually turn that off if you don't want it filled. Okay, the way we do that is we just go over here and we'll say fill. Sorry, I did not mean to do that. We'll go here and we'll say fill. Let me make this a little bit bigger so you guys, hopefully you guys can see this fairly easily. We'll say fill, and then we'll create that as an input so that people can easily change it. Hopefully that makes sense, like just creating an input. We'll say true. So by default, it will be true. And then we can call this something like, as we called it, fill plot line. Are we good so far? If I'm going too fast, maybe just rewind the video, watch it again, try to reproduce what we're doing here so that you're watching it, say, every step of the way. Now from here, we want to actually calculate the moving averages. And you can actually leave comments by doing two slashes, and we'll say calculate moving averages. Okay. The first one, if we wanted to be very good with our programming, we might just call this, actually we'll do this after study. We'll just call this inputs. Okay. So we have our inputs, and then we are going to calculate our moving averages. So to do that, we'll call one the slow moving average. This will be the SMA, and we'll just say SMA. Okay, it will recognize that. So we'll say slow moving average equals SMA, and then we want to get our source, SMA length. Okay, so let me explain that. So we're calling this variable our slow moving average, our 20-week moving average. SMA is recognized by TradingView. It's the simple moving average. You can see it. It shows you, if you hover over it, it'll show you the syntax, SMA, source, length. We're getting our source. We defined it here as the closing price. Length, we want it to be our SMA length. So we'll say SMA length. Now we don't actually need we don't actually need it like this, but in order to provide it so that people can change it by referencing it, then we know that people can change it as an input. And then we'll also then do another one, but we'll call this one the fast moving average, or we could call it something else, but we'll then say EMA source, EMA length, LEN. Okay, so now we've defined our 20-week SMA and our 21-week EMA. From here, we want to plot them. Okay, let's plot them. So we'll say plot moving averages. So we first defined our inputs, we then calculated our moving averages, now we're going to plot them. So fortunately, it's already provided one for us, but we can just hover over this and change it. And so we're just going to say plot series equals fast moving average. So we're basically plotting the entire thing. We could do the slow moving average as well, but then we want to color it something. Okay, so we'll say color. And I'm trying to remember, I guess I colored, you could do it green, you could do it red, you could do it whatever color you want. Let's say color equals, and this is the syntax, so color dot line. Okay, so that means it'll color that moving average line. And then if we want to, you don't have to do this, but if you want to say specify the line width, you can do that as well. And you can just say line width equals 2 or something. So then if you want to do that for the exponential, or the other moving average, this SMA, you can do the same thing, and you'll say slow MA, color equals red, line width equals 2. Does that make sense so far? So let's hide this and see what would happen if let's save it. Okay, we're going to save it. And let's make sure that is saving. It looks like it is, and then we'll add to chart. It looks like we're getting a syntax error here, title. So let's see where I made a syntax error. So this is a good thing. I mean, I could, just edit this out, but I don't want to, because I'm sure people will have errors as well. So you just go look. It'll show you where the error, it'll say, okay, line 12, you just go see, and I clearly just forgot to put an equal sign, equals. Okay, so it'll tell you where it is, makes it easier. You can save it, add it to chart. And what do you see? What's going on here? Why is it doing this? Well, it's because we need to add something. Okay, there's something we need to add in our study. Okay, so the first thing we can do is say, okay, let's call this the title. But here, what if we don't want this? What if we want it to be overlaid over the chart and not be a completely separate box? Because who wants to look at it in a completely separate box, right? So in order to do that, you just type in, not up here, you just go back over here, and you'll type in overlay equals true. And then what happens if you add it to the chart? Now it plots it on the same chart. Hopefully this makes sense. So we're stepping through this one step at a time. What if you don't want the time frame to change based on what sort of time frame you're looking at? What you can do there is you can just say resolution equals weekly. So we know that now this will be a weekly resolution regardless of whether you're looking at it on a daily time frame or a weekly time frame. We'll save it, we'll get rid of this, we'll add it back to our chart. You can see it works. If we switch it to the daily time frame, it also is the same thing. Okay, so let's switch it back. Here we are. Good so far? Hopefully we're good so far. Now from here, what can we do? What did I do? Now remember, when I did this, I filled the area in between them. So do you see that? Like how it's like filled in between those two moving averages right there? The first thing to do that, if we wanted to do that, we just use a command called fill. Now I didn't know all these, right? I just Googled them. So for instance, for fill, I just came over to this website, filling in the background with fill, and then you just figure out, okay, I want to fill in the background between these two moving averages. Okay, hopefully that makes sense. So we just come back over here and we type in fill, and then we'll say between between our two moving averages. So in order to do that, we'll need to name these plots. So we'll call this one P1 and we'll call this one P2. So now we're going to fill the region between P1 and P2. And then from here, we just tell it that we want to fill it, right? So we already did this. Color equals fill. We already provided it up here. See, fill right here. We're allowing it to be passed as an input. Therefore, people can decide whether they want to use that as an input or not. They can toggle it on and off. If they do want it on, and by the way, this is just the syntax, and you can follow the syntax over here. If they do want it on, we'll say color dot blue. Now it'll be color coded blue, and otherwise we'll say NA, not applicable, right? We'll say no other color if it basically in between that region. So hopefully that makes sense. We're just filling in the region between those two plots. Now, what if we add that to chart? What will happen? Let's see what happens. Add to chart. You can see now it's filled blue, right? It's filled blue. So all we did was we said color blue. If we were to go over here and change this to say color.red or something, it doesn't even do anything, probably because of the way this is defined, because we're just filling it between the chart. But when we do the background, in a minute, you'll see how that works. So let me go back and just say, okay, this one it's not applicable to what we're doing here. There's one other thing though that I did. And if you guys remember it, I'm color coding it based on whether they cross. So let's say we want to color code this based on wherever they cross the background. So let's do that. So in order to do that, we'll also go to background color. Okay, so we can define the color. We'll say, we want it to change the background color whenever they cross. And what do we want when they cross? The slow moving average and then the fast moving average. This is basically just the 20-week SMA and the 21-week EMA. And if they do cross, then we want to color it, let's say, teal. Does that make sense? We're just picking out a color. So if they do cross, we'll color it teal. If they don't cross, we'll say NA, close the brackets or close the parentheses, add to chart. Now you can see it's color coded it based on any time they cross. So anytime these moving averages cross, it's color coding it. If we change this here to be color red, then basically that means that anytime they cross, it'll be that color, and any other time it'll be red. And then you get something that looks like that, right? So then you could say, okay, well, I know these green areas are when these moving averages are crossing. This could be useful, especially if you're looking for, say, golden crosses, right? If you're curious about where golden crosses are, where 50-day moving averages go above the 200-day moving average or something like that. But we don't want that, so that's why I just have, if they don't cross, NA. hopefully this makes sense. I'm hoping that people are finding value in this. If people do like this, I can always do more videos on this, but I don't want to get too far ahead of myself because I do recognize there is going to be a sizable audience that is not going to be interested in PineScript and using the Pine editor to sort of code their own things. But let's say we add it to chart, then we could go up here to settings. We have all these inputs. We can say the indicator time frame is 1 week. We know that we can change that to be whatever we want. The SMA length is 20 weeks. We can change that, right? And you can see how the crosses are automatically changing. Okay, so this is a pretty cool way to navigate TradingView where you're not relying on other people's scripts and whatnot. Okay, so you can just change all this stuff. Isn't that pretty cool? I think it's pretty cool. Okay, so we'll cancel that out. We'll do this. We'll add it back to the default values. And there you go. That's a rudimentary introduction to PineScript. From here, we'll just briefly talk about where we are. I mean, not a whole lot has changed in the last couple days. Bitcoin has retraced some. It's at $52,000. Obviously, I'm going to be looking for lower levels for me to come back in, but there is a decent chance that we rebound here. If we look at say like the 8-week moving average, we know that has been holding as support for the last several months. Okay, and we've been testing it today. So I would say keep an eye on some of these shorter term moving averages, and if we start to fall below them and sustain that fall, then we'll be looking towards other things like our trusty Bitcoin bull market support. Now, if we look at our risk levels, we can see that Bitcoin is at 0.76, still relatively high. A lot of these are back in the 0.5 to 0.6 risk band. Time is on our side in terms of, even if the values were to stay constant, the risk levels will slowly come back down. You might say, well, why not just go ahead and buy them? Well, you could if you have a higher risk tolerance, but I also have some stable coins right now that I'm enjoying just earning interest on. And so I'd rather just keep doing that until the risk levels come back down to below the 0.5 risk level. You can see the extension of Bitcoin above the 20-week is now only at 53%, so it has cooled down a lot. We've gone above 100 a couple times. We don't really stay there very long. We've gone into the 0.9 to 1 risk band a couple times. We have not stayed there very long either time. A good lesson to say, well, in the future, if you see it happen again, we're going into 0.9 to 1 risk band. We know that we don't tend to stay there very long. And obviously Ethereum has taken a pretty big hit. We know that, the same sort of sub-cycle it's been going through, nothing really has changed. We'll be looking for diminished Bitcoin volatility before we'll see a major Ethereum move. Until then, I would just sit back and relax and wait for it to happen. If it drops low enough, then I might actually come back into the market on Ethereum and put new money in. Right now at the 0.5 risk level, that would be a modest $1,330. For Link at 0.5, that would be $20.76. For ADA at 0.5, which I used to only go up to 0.4, I've changed that to 0.5. But I can tell you, if all of them go below 0.5 at the same time, I'll probably focus on ADA last, just because it has gone up so much in the last year. Out of all of them, I would assume that one could actually come back down a little bit more. The 0.4 risk level for ADA, which is what I would normally accumulate, is actually still less than 50 cents. 0.5 is actually at 84 cents. I'm not saying I won't accumulate it at 0.5, but if they all go below 0.5, I'll probably first look to get Ethereum and Chainlink. Obviously, Bitcoin would be nice. My Bitcoin percentage is getting low. Historically, I only buy Bitcoin below 0.5 risk. It becomes this game of how risky do I want to be. We know that the 20-week moving average is closer to $36,000. For the Bitcoin risk at 0.6, it's also around that same level. I talk about the importance of the bull market support band for Bitcoin. If we were to go back down there, say in a couple weeks, it would be hard not to buy, even if we're not at the 0.5 risk level, because we know that that's where the bulls come out and try to hold the line, and it would feel nice to help hold the line there as well. So I'll keep you guys updated on what I decide to do there. We know that if the price just stays constant for a while, then the risk levels will slowly move up. So that is something to keep in mind. So it doesn't necessarily mean that it'll continue to play out like that. Hopefully this video has been useful. I hope you guys enjoyed the introduction to PineScript and TradingView. I'm sure some of you guys already know how to use it, But for the vast majority of people who do not know how to use it, now you at least have a rudimentary explanation as to how to use it, and now you can go create your own TradingView indicators. Thank you guys for tuning in. I hope this video was useful. I will see you guys next time. Oh, and by the way, if you have any questions or comments, leave them down below, and I'll try to get to those when I have time. Thank you guys for tuning in. I'll see you next time. Bye.